Hey there, we're live. It's August 15th, 2024. Welcome to Deribit Live. I'm Shane, along with Richard from Rogue Trader Academy. And let's jump into it. We're a little behind schedule today. Got more people rolling into the room. Richard is on the road today. Battle scars and everything.
I feel the need. Did I explain my scars last week? I probably didn't.
No.
There's a very innocuous explanation. I fitted a bike rack to my car, and then forgot the bike rack was on the car. So when I closed the boot, or the trunk, as you guys call it, I closed it with the bike rack with the bike on it, hitting me in the forehead.
Excellent.
Yeah, not recommended. So I'm on the road today. I'm visiting my friends at Clearpool.io. It's a firm that makes pretty cool technology that runs DeFi matching and clearing engines and settlement engines and exchange tech, DeFi and CeFi exchange tech. So some old friends of mine.
Oh, okay. Well, that's cool. That sounds interesting. Hey, when you're up there, I've always wanted to see a hurling match.
So I'm in Northern Ireland.
I know they have it there though. I know they
do. Okay.
Yep.
I mean, it makes sense, right? So it's a shared culture. Yeah.
Yeah.
Okay. I mean, I'm not here long enough to go and do all that, but we should do a road trip one time.
That'd be awesome. Yeah. All right. I don't think I if anybody receives the emails, I think there's an email or two that goes out just saying, hey, are things coming up? I don't think I updated it, so it might be the same topic from last week. It's not the same topic. We still got more people rolling in. We're going to talk about something a little bit different. I've got Andrea, Jason. Hey, Jason, Vladimir. Good to see everyone rolling in. Let me just start I've got some slides here. Let's just, as usual, we'll start off with the topic. And at the end of our half hour together in the last 10 minutes or so, 10, 15 minutes, we'll answer some questions. So if you've got some questions about trading or positions or what we're doing or whatever you want, let us know and we'll get to those questions at the end. Just put them into the chat area, please. Constantine, good to see you. All right. So what are we doing today? Well, we're going to do a little bit of a recap of what's happened so far. I think that we've been, I don't want to say necessarily caught off guard, but we were sort of preparing for a range-bound, lower volatility summer than the absolute chaos and anarchy. Now, as you all know, we run a little strategy, which is a long strategy that we started just for you guys here called the synthetic miner, where we're mostly selling puts, but we're doing other things as well in order to generate more Bitcoin. So when the price of Bitcoin goes down, we're going to feel that. And we had a 30% decline from top to bottom, from 70 down to 48 or whatever it went down to. A 30% decline. Is that what I said, 30%? So that hurt. So we're down, but we'll see how quickly we can recoup that. We'll be a little bit more. I think we're going to be
really the low. The low was really 48, was it?
Yeah, I think because I remember I had some bids layered through the 40s to pick up perpetuals, the futures, and it didn't. One or two of them might have got hit around 49, but for the most part, I didn't get them. I was really hoping to have a crazy wick. I was hoping for a crazy wick down to like 40K just to scare the pants off of everyone, but it didn't happen. I guess what I'm trying to say is that it's been a little tough for some people who especially if you're running a long strategy or even if you're hodling, it's like, oh, really? But I think this is just part of the process. We've had a lot of stuff going on. We had the market meltdown 2 Mondays ago, which caused the big decline in oil and gold and stocks and everything. Really quite hurt us a lot. So let's just go ahead here. And again, we're going to talk about a bit of the 2024 chaos. If you have any questions about that, let us know. And questions, please.
And guys, do put the questions in the Q&A only section at the top of the chat. There's a button for Q&A only. It's not a big deal. We look for them in the chat and we move them if we find them, but we sometimes miss them if they're in the wrong chat.
Yeah, and you got to realize we're a little old. We've got reptilian brains, so we're not flexible. And yeah. All right, so let's just take a quick look what we've got going on. I've been running for 161 days. We are down. We're down 14.9%, which sucks a little bit. But as option sales, we get used to drawdowns. We don't want to have a drawdown this big usually, but again, this is a long strategy, so it's going to suffer when things go down. USD, we're up a little bit in USD cash, but against hodling, this is going to be the interesting thing here. Let me take a look here. Is it okay that are our pictures too big, or is it not blocking?
I think normally the pictures are to the right. I think I moved to the left.
Yeah, I moved it to the left because often what was on the right was blocking stuff. So, anyways,
I think everyone can see the important bit, which is that we're below the red line, and this must change.
The red line is the hodlers, those people we like to poke fun at.
Yeah.
Well, right now they're poking fun at us. So
the hodlers are beating us, but we will return. We will recover.
Yes, General MacArthur, right? I shall return. Again, this is a pretty static strategy. If you're selling puts, you're probably gonna get beaten up. So let's see what else.
And to be fair, so we are long Bitcoin, and we are essentially always short three times NAV in puts. So we're actually in dollar terms always short sort of 4 times NAV maximum in puts. So it's quite an aggressive long strategy, which is why we're getting so badly hurt. But we've made some changes. I think we did it last week. We said that we've rolled some of our in the money puts right out to in the money long dated puts, and we're kind of treating them as futures, and then we're writing calls against them to try and sort of claw things back.
Yes, and we'll look for opportunities to bring them forward again when market conditions are favorable for doing so.
Do you want to? Are you able to share? Because it's not normally me screen sharing, but I'm on an iPad today, so.
Yes, but you have to be patient, Richard. I have to go one.
Sorry, because you're old and reptilian. I got it.
Exactly. Yeah. So this is the synthetic minor return for Bitcoin. This is the Bitcoin return, and the red line is hodlers. And just here's our cash, so we're slightly below the hodlers on cash. Here, let me stop sharing the slides. And
but also worth remembering, this could change in an instant. It could get even worse, really, really fast.
Well, and if we look, it can get much worse. Bitcoin goes to 30,000, where we're all going to be, rocking it in the shower like the crying game. Right. So, this is just one strategy. We run a lot of different funds and a lot of different accounts. Some are doing great.
I feel optimistic. We're going to get this back. If you share your screen, come on, Grandad. If you share your screen, I'll just explain what we're doing here.
What screen do you want me to share, Deribit?
Just the options, chain for
sure.
for the synth miner.
Yeah. Okay.
You're showing the dirty bird there.
Everybody's heard about the bird. Okay, can you see that?
Yeah. So I just want if you do bring up the December expiry.
Yep.
So what we've done, we had a bunch of in the money puts in August that were at sort of 65 or 68,000, and what happened was that the cover became had more time value in it than the actual short puts. So we took the view of let's buy back those put spreads and just sell naked puts out in December to the same or higher value. Notional value, so we've preserved the cash to some degree, and we're saying, well, these now are looking a lot more like long futures than they are. This is like there's a big store of cash out in December, or a big store of long delta. So, and we bought some October 10% down puts just to protect that a little bit,
and September too. Yeah.
Right. No, I think that's
September's the call.
That's the upside bet that we optimistically thought we were going to go above 70K in September. We might yet, but we'll see.
Right.
So we've got those long Octobers, and so they're helping the margin stay low.
Mm-hmm. Yep.
And now what I'm saying is all we've got to do is recover. If we're happy to stay long the market, we need to recover the cost of that October puts by selling short-dated calls.
Yeah.
So we're sort of long. We're short puts, long puts, and then short calls to pay for the long puts is pretty much the strategy at the moment. Just to get this, to try and drag in some cash against that long delta. So we've been we've been less aggressive than I would normally be because we thought it might bounce suddenly. But if you then go to the short dated side, do we have any short calls left, or they all got bought back?
I think maybe one, just 0.1 left. Everything got bought back earlier this morning. Okay. I think we had 61 and a half, 62.
Currently trading at 11 for tomorrow. So we need to be quite aggressive. Actually, we're also short a put, interestingly. Well, we'll get that straight back. That put, that would massively improve margin. I mean, we could. Wow. This is expiring tomorrow.
This expires tomorrow. Yeah. These 56,000 puts.
So I think going into the weekend, we could probably afford to be quite aggressive. Now, I almost feel like I'd rather wait for the US Open before I do anything.
Yeah.
Because once the US does open, I think what I want to do is aggressively sell Saturday or Sunday call spreads against our delta. Yeah.
We do have some numbers coming out in 15 minutes. I think the unemployment and CPI or something.
But if the US doesn't do anything on those numbers, I would go in hard at 59,500 or 60K. With double cover, 5% away, something like that. Yeah. And just to drag in as much premium as we can every couple of days to just try and, because we paid 400 basis points for the October puts. I think about that much.
595.
Okay, so we need to drag in like 600 basis points. So if we're dragging in 50 basis points or 25 basis points a day, then that's going to take us 24 days, a month to get that money in. And once we've got that, that's effectively then the October cover is free.
Yeah. And those 56,000 puts, we sold them for 0260. They're 13 right now. We could just legitimately just buy them back right now and just get that risk off the table.
But then again, we probably should, to be honest, because we don't need any more downside risk, to be honest, right? and it's giving up a little bit of cash, but in the scheme of things, I'd rather have the margin free and not, there we are.
There we go. We're on the inside there, so let's see if we can get filled there. Margin will drop quickly.
And if the US was already open, I would be now selling. I'd probably sell 59,500, 60,000, maybe even, for Saturday maybe.
Yeah, and we'll double cover them. I'm kind of hoping we take a little pop up above 60, 61, and then I'll sell some there. And there's a chance that it might not. So if it looks like it's not going to do much, I might just scale into that. I'll sell a little bit if it's not moving and then wait. Because realistically, if it breaks down below here, we are looking at, and in fact, let me show you this on.
It's going to be carnage, isn't it? If it breaks below here.
It could be. Well, maybe not necessarily carnage. But
I mean, right now the market is like a roller coaster of emotion, isn't it? Because when it gets down to sort of 58, you think, it's going to fall off the face of the earth, and then it pops up to 61, and you think, it's going to go ballistic, and so it terrifies you whichever way it goes. But I think I personally feel that what we're seeing in this sort of uppy-downy action is actually an aftershock of the shock we had after the Trump sell-off and all of that. Right? The Trump speech rise back in last month, and then the sell-off. And then I think there's a load of residual gamma at around here in the market between 55 and 65, and each expiry we get to, people are rolling that gamma to another week or another month. And as they roll it, of course, they're buying positions back and selling positions, and they're causing market makers to have to re-hedge because they've got a load of delta hedged against those in the money positions. And I think so. What's happening is around expiry, people are doing these big rolls, and it's causing market makers to have to go in hard and re-hedge, which is, of course, as the futures get driven up and down, that's dragging spot up and down. I think that's my working theory of what's going on. And I haven't looked, but I'd be interesting to see what the CME volumes are like around that, because you might find that it's being driven by that. And it's not lost on me that these moves are happening on a Tuesday or Wednesday and the Wednesday is a CME expiry. So something like that, I feel, is going on, right?
Yeah. Even if we're looking at these liquidation maps, there's not a lot of leverage positions going on right now. However much you want to read into this, you can. It's pretty light right now. We had a little bit of outflows everywhere yesterday, except for a bit on IBIT. But what I wanted to show you on the chart here was that really it's doing exactly what it's supposed to do. Look, it pushed up into this area of resistance, kind of came down, farted around in between. It's just farting around in between. I expect if something happens, we're going to go back up to the top here, and I'd rather sell some calls at that point. If we push down here, I expect some resistance. I don't expect it just to plunge straight through unless there's a news event to cause it to do that. So from a technical perspective, let's just see if these numbers come out, and maybe they will tank it, and we'll you snooze, you lose. But I've got a feeling that if there's any strength at all, we're going right back up to 61, 62. And,
I mean, the thing is, it's August, right? So everyone's on holiday. So
yeah. Well, look at this. There's nobody playing. Nobody playing.
So no one's phoning customers, flogging them ETFs, and dealer brokers are all selling themselves on their yachts or commiserating in their new shanty towns where they all went broke. And so it's just meandering around, I think. And I would just, you'd imagine that vol would sort of, well, I think actually it's a thin market, so you'd expect vol to decrease. And in fact, we're seeing vols getting marked down by about one handle a day at the moment. But you'd kind of expect the volatility to gradually disperse as all this market irons itself out, getting ready for the September when everyone comes back from school, or back to school.
I think you're the only person in the world who thinks that all market participants who have any money have yachts.
Well, I think there's a common, and if you're probably a bit, you've got a screw loose if you're options trading on Bitcoin anyway, and and if you own a yacht, you've definitely got a screw loose. So there's a commonality there, right?
That's right. All right. Hey, 20 after, we got a few questions here. Is there anything else you wanted to talk about in terms of your theory of what's going on?
I was thinking, in terms of my, Richard's grand theories of the universe, in terms of Bitcoin, and bear in mind that this is based on no information. It's just my sort of, I would say intuition, but that's even too strong. Guesswork. I don't really feel there's any sort of macro push either way for Bitcoin, right? There's hodlers saying I'm not selling, and there's ETFs gradually buying. Well, the BlackRock ETF is being sold to people, but probably not aggressively until September, I imagine. And there's a little bit of sell concern around Silk Road, maybe, but I don't think it's strong. Iran seems to have backed down. As expected, or at least as I expected. Probably nobody knows what to make of the Ukrainian heroic incursion into Russia quite yet, because I think I don't think it means much in terms of Bitcoin. I think everyone in Eurasia who needed to be in Bitcoin is already in Bitcoin. Which is a long-winded way of saying I don't really feel like there's any strong buy pressure or strong sell pressure. No, it's just whatever people do randomly in the market, right? I think.
Yeah.
Which is ripe conditions for options expiries to move prices around.
I really feel the biggest catalyst will probably be the ongoing kind of U.S. presidential election as polls come out and you try to determine which ones are real, which ones aren't.
I don't think so. Both candidates have quietly forgotten Bitcoin. So Kamala has got a bunch of people who really hate Bitcoin on her team. And I say her team, I mean the deep state team that Kamala's the figurehead of. And Trump in his last interview with Elon Musk, neither of them mentioned Bitcoin at all. And Trump and Elon Musk are the two, cheerleaders for Bitcoin.
Yeah, but they've already talked about it. I don't think they need to beat it.
I think Elon's got other things to worry about and to be interested in. And I think Donald Trump, has become a politician. Yeah. And so we'll say what he has to say on the day, right?
I did see that Musk, he's launching some 4 astronauts into space to do some polar orbit thing, which is quite interesting. Anyways, I digress. We do have a few questions here. We got 10 minutes left. Question from Jason. A question about Deribit options fees. Why is the maker fee not less than the taker fee? Trading a small account fees are a killer. Yeah, that's a great question. And
first, before I answer this, a disclaimer: neither of us work for Deribit, so we're not going to speak for them. But I've actually asked the Deribit team the same question myself because it made no sense to me. And the response I had back was that Deribit value fairness over rather than being generous to makers and ungenerous to takers. And there's logic in both, because I know that other options exchanges do reward makers more than takers. And there are two things can occur. So in options markets, options tend to be much more discretionary in terms of the way you trade them. So, and if you want to trade options, you'll go in and essentially tell the market you want a price. You'll do an RFQ or whatever, and somebody will show some liquidity. So everybody gets to trade optionally. It's not like you need to have a full market because somebody will always come and show you a price if you ask them. And the trading cycle of options is way slower cadence than spot or futures. So you kind of don't need so much liquidity in the market. So there's no real need to incentivize people to show the liquidity. On the other hand, some other exchanges do incentivize liquidity showing, so they get more liquidity shown. But what you tend to find then is the market just locks up with loads of liquidity and no one taking. So it doesn't really make much difference.
It's funny. I remember when I was equity scalping, there were certain ECNs you would use that would give you a whopping huge credit, and the market could be ripping, and just a small order could show up from this ECN. It would just stop the market in its tracks because nobody wanted to pay the ridiculous fee for it to get a credit, right? So it's funny how 100, 1,000 shares could stop a market or something. It is, but and I suppose there's another aspect to it too. So there are other exchanges out there where there are lower fees for a maker, but you're not going to get the same depth and liquidity or tighter spreads. So when you really calculate it at the end of the year, if you're paying wider spreads, how is that impacting your bottom line? So maybe you wouldn't find much of a difference by the end of the year, but yeah, fees are something to consider, Jason. Question from Vladimir. Maybe to get the strategy plays very good, it's a good idea to buy long-term puts and sell naked puts against them.
Yeah, that's another strategy. I mean, all of these strategies that have asymmetric longs be shorts all suffer from the same problem, which is that no matter how you construct it, the market will find a way to weave in and out of your strikes to always screw you. So, yeah, in general, I mean, markets always hunt your maximum pain, right? So they seem to,
Well, and if you think about it, most people tend to kind of make similar decisions. If all of a sudden the price moves, you're short. You can see what the open interest is. If you have to adjust and roll, everyone's in the same boat. So it makes sense that they're not hunting you personally, but
yeah. I mean, your strategy, your proposed strategy is perfectly legitimate. It's just that with our book, I took the view that the longer term risk is up and the shorter term risk is down. So that's why I positioned it that way. And I took the view that probably I'm going to get away with 3 or 4 weeks of being able to be really aggressive selling call spreads before it does go ballistic up. So if we sell really aggressive call spreads, but in 1x2s, then we can pull in a huge chunk of that premium we spent on the October cover. And if we're wrong and the market does go ballistic up, well, we're long 1x2s, so yeehaw, that's kind of what the thinking.
Yeah, and if we look on our risk matrix, we're usually almost always long delta, and we're making money when it's going up, even despite our short calls typically. So,
yeah.
Okay, a question from Gene. How do you spot market makers hedging from looking at the chart, if it's even possible?
So
again on the chart.
You tend to find that people who are going to roll their options positions like to do it either just before expiry or or some days before expiry, because it all gets very high gamma if you don't. And they tend to leave it late because they want to extract as much time value as they can out of positions, even if they're in the money. And so when it does come time to roll, they will take quite a lot of delta off the book, or put a lot of delta on the book for the guy on the other side of the trade. So if you go and buy like a in the money put, then you are essentially getting super short. Now the market maker on the other side of you is getting short puts, so he's getting long the market, and he's got to then sell futures to hedge off his delta. And if that position is deep in the money, he'll actually enter quite a big futures trade to match off the delta straight away, because he doesn't want to be left with the delta. So if you do a big in the money put buy with a view to rolling out to some later date, the market makers has got to essentially sell almost the same amount of notional as futures as you've bought puts. And so if you've done, I don't know, 500 bitcoins of puts, he's got to go and sell 500 bitcoins of futures, or 400 bitcoins of futures, as you do your trade, which is of course going to put a lot of pressure. So that's why, and so what I'm seeing is just like a day before expiry or 2 days before expiry, we're seeing these 1%, 2%, 3% jumps, 4% jumps. Kind of puts me in mind that maybe it's because people are rolling, and it could be on Deribit, it could be on CME, it could be on another options exchange. It could be OTC. There's a lot of options traded OTC, and you might have a market maker who's, I don't know, short, just doing what do they call it, covered calls. You've got a market maker sitting on 10,000 Bitcoin maybe, and they've sold 10,000 calls, which are in the money. And then with 2 days to go to expiry, they're going to roll those to a month out. Well, that's going to be think of the hedging involved. There's going to be like a residual 3,000 Bitcoins of futures that some market maker's got to sell.
Question from Vladimir. It's funny, Vladimir put in, he goes, here's another cool idea to implement, and then there's nothing. I was like, are you gonna message again? And he did. So he was typing. So I was waiting for you, Vladimir. So he says, if you take a closer look at the premiums for long dated futures, you'll notice that it fluctuates quite a lot. So you can long those futures when the premium is low and sell in the money calls against it, and turn around when the future premium is high.
Yes, you can. So you're kind of combining a basis trade versus a vol trade, a long dated basis trade versus a short dated vol trade. You could do that. As long as you cover your short calls, but particularly if the long dated vol is lower than the short dated vol, that's a nice trade. I think at the moment, we're 61 vol out of just December, and 55 in the short dates, I think now. I'm just checking.
Yeah, it must be around there, because I see the D vols around 54 and a half or so.
I think actually tomorrow expiry, it's 55 at the money.
Actually, I wonder if after when today slows down, if we're going to get a pretty big drop off in vol. I wonder if we're going to get down into the high 40s or something this weekend. Could be.
I think if my working theory is correct, and we're just seeing the shockwaves of the conference and the moves in July, I think we will, once all of that gamma works itself out and people get rid of the gamma, and then vols will go down, and then we'll wait a week or two, and it's normally no more than 2 weeks, and then market makers will get bored of bleeding money, because everyone's going to be short strangles against the market makers who are long strangles, and then the market makers are going to want to move the market to cash in on their strangles. So over the next 3-4 weeks, any calls I'm writing will be covered twice for sure.
Yeah. All right. Geez, we're at the bottom of the hour. Any last questions before we take off? And what is it, 2:30? So we should be, we might be getting a little bit of market activity now with the numbers due to come out.
I see we're running a little bit. Vladimir made a comment here. Unless Russia nukes Ukraine, it won't have much impact on the BTC price.
I agree. I don't.
I mean, in fact, what is the effect of a tactical nuke on the Bitcoin price? Good question, right?
I think it'll be a knee-jerk down and then up. But that's what I think for practically any news you hear.
Anything, right?
Unless
Yeah.
it's super
Any
positive.
shock is going to be
yeah.
risk off followed by the dip, probably.
Yeah.
Although there were some tests there in the 50s to test the effects of EMPs from nukes set off in the atmosphere.
Mm-hmm.
They were set off over the South Sea Islands, near Bikini Island.
Mm-hmm.
And the results were quite shocking. The EMPs travel for thousands of miles.
Yes.
And knock out electricity and radio stations for thousands of miles. So, to be honest, it wouldn't take that many airborne nukes to actually shut down all the computers full stop, and then we'd all be in cold wallets and reboot Bitcoin.
That's true, and I think the U.S. system is particularly vulnerable because it hasn't been hardened. It's kind of decaying quickly. It's funny. As a young man, I used to work in a smelter, and for a while I was running the vacuum arsenic distillery, and that's where we used to make gallium arsenide, which is what they coat computer chips with to harden them against an EMP. Actually, I think I shared with you, you ridiculed me. I'm sure you ridiculed me, but you do that quite often. I read a book recently written by a guy who said that the whole idea of nuclear war has been totally blown out of proportion. It's not nearly as bad as you think, and they're doing it as a deterrent. So, we don't ever want that. That says it's going to be a big deal. Okay. It was an interesting book, and I think it was worth. I like to hear other people's opinions.
Yeah, I've seen Mad Max, so I know all about surviving a nuclear holocaust.
There's a new one out. I hear it's terrible. What's Bronco? Iran nuking Israel? Yeah.
It's absolutely not going to happen.
I don't think so either. I suppose a mistake could happen and people could get irrational and something happen, maybe, but I don't think so either. But
I've said it before. I'll say it again. Iran, the vast majority of Iran's army is pointed at Iran's own people. Just under half the people in Iran hate well, actually more than half hate the administration. If Iran was actually to declare a ground war with any other nation, half the population would actually join the other nation.
But here we're talking about a nuclear, and that ground war is off the table at that point. It's just out of screw you, we're doing this, get rid of you. So it's a little different situation. It's got nothing to do with the military.
Even the mullahs in Iran are rational human beings. I mean, they might have their reasons for horrible laws that we found intolerable, but they don't. But they still want to live, right? Because they don't really believe that they're going to get 72 versions in heaven. That's just a lie that they tell their followers, right? To stay in power. So they want to live. They want to enjoy the fruits of being rich and owning a country. No one's going to start a nuclear war. No one.
There we go. You heard it here first, folks. So nothing.
I guarantee. I'll give you a lifetime guarantee.
Lifetime guarantee. It's a guarantee you can't cash in, by the way, but guarantee nonetheless. All right. Any last questions?
I grew up in the 80s next to an airbase in the UK, and every couple of months they would do a nuclear siren test and scare the bejesus out of me. And I'd wake up, is it real? And I used to ask my father. I was 10 years old. I asked my father, what do we do? And he said, look, son, it's in no one's interest. No one's ever going to do it. It's all bullshit.
So speaking of the smelter I used to work at, there's these old towers there, and they made all the heavy water for the atomic bombs for the Americans there back in the 60s or whenever they made them in the 40s, 50s. And my dad used to tell me, I'd be like, we'd drive him by and I'd be a kid. I'd be like, Dad, what are those big towers? He said, well, son, that's where they made the heavy water. He goes, you know how they made heavy water? I said, no. We started at the bottom with 2 buckets. And by the time you got to the top, it was heavy water. It was a total dad joke, but I still remember.
I can see where you get your dad jokes from,
Yeah. All right. Any last questions? Please just plug them in. We'll stick around for another few seconds here because we are a little bit over time. What's the market doing? It's up to 59. So, see, I told you, Richard, I don't want to sell the calls until it. But who knows?
Yeah.
We'll right back
I've got some 59K calls expiring tomorrow. They're a little bit under pressure, but we'll see.
Hopefully we can. for me, I'm hoping we can push up through 60. Then I'll start to scale into some short calls that'll be dated over the weekend on the synth miner, as we discussed, to offset some of those costs we have to offset from the October long puts we had to purchase. So, all right, everyone, that's a wrap for today. Hey, good to see everyone. Let's reconvene next Thursday as usual. Until then, take it easy, and we'll see you next week.